If you want to be a successful investor, there are mindset traits that every successful investor has that I'm going to go over in this video. And number one, if you want to be a successful investor, being avoiding the shiny object syndrome. I'm talking about the attractive investments. But what ends up happening to most people who start chasing these types of shiny investments are, well, you end up paying the price. And they go through these bubbles where the early people who get into these types of amazing opportunities, you might be able to get in, be a testimonial, and get out quickly. But it's almost like a drug where when you start to make that money, you don't want to get out. And so now you want to go in even deeper. You make some money and then you put it all back in there, maybe even more. And you start telling your friends about how much money you're making. And then that's when they come in and it keeps growing until ultimately this investment, which was poised to make everybody so rich, starts to implode because it didn't have any real value to begin with. Ignore the traditional media. Look, I'm going to be a little bit honest here because I work in the media space, and most traditional media is in the business of selling hype and emotion. And if you make decisions based off of headlines, it's going to be a very emotional roller coaster and a financial roller coaster for you. That means when you are investing your money, you got to cut out the emotion and look for the real opportunity. Because most of the time, things are never as good as the media makes it seem, and things are never as bad as the media makes it seem. It's somewhere in the middle, and it's your job to figure out where that is. Now, if you want to actually figure that out, this is where you want to be digging into the raw data, reading unbiased news sources, and creating your own education yourself. When you see a stock or any asset on the news growing quickly, you get excited and you say, oh, I want to get in too. You might hear of the newest tech companies, the newest AI companies, the newest whatever companies that have been booming. And you don't want to miss out on the fun. And the common story amongst every time this happens is this stock or whatever asset has gone up by 50%. It's gone up by a lot. And every expert that comes onto the financial news says that there's so much more room for this thing to run. There's so much more upside. This is just the beginning. It's going to get so much better. And then now you get excited and you think, maybe I don't want to come in too late. But then you see the stock go up by another 10% and you say, you know what? Yeah, this is it. I want to get in. This is going to go up so much higher. I want to get in. Now you come in and you start buying. And in the short term, you might see your investment go up even more. But then what ends up happening a lot of times is 2 months go by and some bad news comes out. This company says we've been growing a little bit too big, or we need to do layoffs, or demand has started to slow down or cool off a little bit, or technologies are changing, or the company gets sued. All these things happen all the time. And then you see all of a sudden the stock drop by 35%, almost overnight. Now the people that got in early before all the media hype, they're still up huge. But the people that were chasing, who missed the early opportunity, are now down. And this is where now when you buy with emotions, you're also much more likely to sell. Maybe if you held on, you might see big gains in the next 5 years, maybe 10 years, maybe not. But this is where now understanding why are you buying. If you're just trying to chase a rally, you're probably too late. Now, if you're buying it for the long term, that's a different story. But when you're trying to chase, many times you're going to end up losing. There will be another once-in-a-lifetime opportunity. And this goes back to not being emotional. Because when you go through now your investment journey and you start finding investment opportunities, you're going to see some opportunities that you feel like are amazing. The stock, I cannot believe how low it's trading. This is going to be a great opportunity. Should I go into debt to buy it? Or maybe it's a real estate deal. This is an amazing property in an area where everything is developing and you cannot believe that this property is for sale. And you feel like this right here is a once-in-a-lifetime opportunity. But if you're not ready to buy it, don't invest on emotion. Because there will be another once-in-a-lifetime opportunity. There is never just one once-in-a-lifetime opportunity, which is why you don't want to get emotional with your investments. If something is not adding up, if the numbers are not making sense, if something is not clear in the deal, don't go in and buy it just because you think that there will never be another opportunity like this again. There will be. There will be another once in a lifetime opportunity. So don't go out and do something that is against your investment goals and your investment strategy just because you think that this is the only time that you're ever going to see a deal like this. And there's no good way for me to explain this. But you know that feeling that you get in your gut? Everybody talks about this. It's hard to really quantify and qualify what that feeling is. But when it feels like something's off on a deal, it probably is. And trust your gut's instinct on this. If the person seems like everything is too perfect, if the asset seems like everything is just too rosy, everything is too nice, it probably is. And this is where understanding that when people are desperate to sell something, they'll be much more likely to cover up the blemishes. So understand that. If something seems too perfect, too good, use your gut instinct and either do more research or potentially consider walking away, because sometimes those can be either the get-rich-quick schemes that talk about how nothing bad can go wrong, or it could be an investment that's on the verge of imploding. And this is where you got to be able to differentiate the investment that's selling for a huge discount and the investment that someone's just trying to get rid of before the thing implodes. And the really successful investors are the ones that are able to kind of cut through all the noise, go through all the fancy stuff, and find the real investment opportunity and stick with it for the long term. But understanding that sometimes the best investments are covered up with the most crap. There is a lot of value in being a long-term investor. It's not the most attractive thing to do, but the successful investors are not the ones that see this overnight success. It's the ones that have worked to build a long-term sustainable portfolio. It is a long-term game. And this is where you got to just stay consistent. And this is one of those things where building wealth is a marathon, it's not a sprint. And you can amplify how fast you can become wealthy. But the way you amplify it is by putting more fuel in the fire, meaning earning more money and putting more money into your investments. If you can work to earn more money, well, now you can go out and buy more investments and build that wealth much sooner, build the cash flow much sooner, build the investment portfolio much sooner. But you have to be understanding that it takes time to build these investments. It is not something that happens in 6 months or even 6 years. This is a long-term game if you really want to get the rewards of being an investor. The second thing every successful investor does is they invest in their mind. And this is where I want you to understand the difference between the price you paid, the cost, and the value that you receive. And this is where now you got to figure out what is valuable to you. And if something is valuable to you, be willing to spend money on that. One person's pain is another person's opportunity. Now I'm going to be very blunt with this because this is the reality of how our economic system works. When one person has to sell an investment at a huge loss, that means you can come in and buy it at a huge profit opportunity. When the 2008 crash happened, people were getting foreclosed on left and right. Now, it wasn't the investors who told people to go out and buy homes they couldn't afford, to go out and take adjustable rate mortgages, to go out and do subprime mortgages, to tell the bankers to go out and do these sketchy loans, to issue loans, to do all these things. But it happened. And then people were getting foreclosed on. And when people got foreclosed on, the banks got overflooded with foreclosure properties. And then the banks had to start liquidating these foreclosure properties. And then investors were able to come in and buy these investments, these rental properties, these homes for pennies on the dollar. Why? Ultimately because people made bad decisions. Banks made bad decisions. Bad things happened which created good opportunities for investors. It happens all the time in multiple asset classes. When you see the stock market fall, well, many times when you see a big crash, that means that people had to oversell off because they had overbought. When people think that nothing can go wrong, they will buy with money that they can't afford to lose, maybe even use debt to buy investments. And then when things go down and they get underwatered, now you can see overselling. And when you see overselling, that creates an even bigger buying opportunity. This is, unfortunately or fortunately, depending on how you look at it, the way that investing works. Somebody has to sell something that somebody is going to buy. And your job as an investor is to be able to buy good investments at a good price. And a good price means, well, if you can buy it at a discount, even better for you. You want to look for the opportunities. And that means number one, you have to be prepared. Number two, you have to be financially educated. And then number three, you have to be willing to take the opportunity when it comes your way, because the reality is somebody else's dumb mistake can be your great opportunity.